Hey, everyone. Hope you're having a great day out there. So today we'll be today the live is a little different because I am actually streaming this from my in-laws place. So you can see different background, different, camera. It's not as clear. I'm using the Mac camera actually. So it's not as clear as my Logitech Brio at home, but that's fine, hopefully. Uh, so today will be very exciting because we're going to talk about Facebook. Yep, we're going to talk about Facebook, and I want to check out their recent Q4, which I haven't done actually, but I want to check out the recent Q4 and you know just to see what are the changes. Is there anything? Is Are there anything we should be mindful of? And yeah, let's get to it. Let's get to it. So let me share the screen. Sorry, I'm not used to the Mac actually. I have to sort of work out, share my screen on desktop. Still on. Yes, I am. Sorry about that. Okay, so I got it open here. Constantly checking whether I'm still live. I am still live. I opened up a couple of things here. Okay, awesome. Sorry guys. Just give me a minute, yeah? I'm not doing this again. Okay, so Meta. Now, how do I derive here? I went to investor relations page, um, and I went into Q4, 4Q, earnings release, earnings slides. So let's check out earnings slides. Oh, by the way, guys, you know the drill, right? Whoever is watching this live right now, click hashtag live so I know you're here. Smash that like button if you haven't. Spread the algos. I know I've been, more active in the group already, and the type of content that I'm, sort of posting is more to mindset, right? Mindset, mentality, because mental models, because these are crazy times, right? These are crazy times, and I do not want to. Well, I want to sort of give more views and provide more mental models because that's the hardest thing to master, right? So yeah, smash that like button if you haven't. Click hashtag live if you're watching this live right now. Click hashtag replay. I know some of you can't watch this, can't attend the live now. Click hashtag replay if you're watching this on replay. And let's begin. So we got Meta earnings, and okay, good. So I just switched on the volume. I scared that you can't hear me. Now let's talk about Meta. Advertising revenue by user geography. You can see it's increasing, which is good. Rest of the world, Asia Pacific, Europe, US and Canada. So US and Canada is actually still dominant using Facebook. I can tell you guys right now, a lot of people in Malaysia are using Facebook, especially to advertise. But it depends, right? Demography, and they use Instagram, they use Facebook. Um, but I don't know. I see like a trend, a growing trend that TikTok will obviously overtake, but it's a different platform, right? They use these for different platforms. But just by looking at this, I'm thinking, okay, um, it's good that actually, US and Canada is actually more. But the thing is though, how the question is this stagnating, right? The growth is not as huge as last time anymore. Because 2020, suffering probably because of COVID. But I don't get why, right? So it's a good thing. I mean, advertising revenue should be dominant. Well, the user the user base should be dominant, but the advertising revenue should be smaller because companies will be affected and their profits will be affected. So hence, advertising will be affected. Then you got a huge jump in 2021, which is actually reflective of 2020's performance. Yeah, so 2020, um, Q1, Q2 is actually reflective sort of on 2019 performance, and Q1 and Q2 of 2021 is reflective of 2020's performance. So, well, not entirely for Q2, but my point is the ultimate question for FB is whether or not they will continue to grow and will growth stagnate, right? So let's move on to the next slide. Revenue by user geography, still the same, predominantly on US and Canada. Okay. Segment results, advertising. So again, it's a company that is dependent on advertising. I am personally still waiting for them to monetize in a different way. And I've been saying this since 2019. So I don't like that. I don't like the fact that, I remember what I said. The reason why I remember more of what I say in 2019 is because that's when I started my own gig, right, for Academy. And I've been telling people about Tesla, Disney, no brainers, FB as well, cash cow, but I want to see growth prospects in the near future where they diversify away from their, advertising revenue. But what I see here, it's still 90+% of their total revenues. That is a problem. So family of apps revenue, Reality Labs revenue. Okay, so family of apps revenue. Yeah, so they have Instagram, they have Facebook, family of apps, which is, well, probably WhatsApp is probably in there, but we need to see the breakdown, right? So let's check out the Form 10Q for Q3. It's not out yet for Q4, but let's check out Q3. And I want to see the income statement. So they just lumped everything in one revenue, and I'm trying to find the breakdown. How do we zoom? There we go. There we go. Zoom in. I wanted to know when to zoom in. So advertising, other revenue. This is in Q3. I'm still surprised because I want to see what is the breakdown of advertising and what are the family of apps. And I better see what's happened there. To be frank, I've never seen their financials for very long. Very, very long. I don't have them anymore. I'm not invested in Facebook anymore. And I'll share my reasons why in a bit. But when I see this, let's see. Are you guys watching this with me right now? Let's see who's here. Okay. You're watching this live right now, play hashtag live so I know you're here, guys. And we can have a very good conversation going. So what I'm seeing here, I'm trying to find a breakdown. United States versus the world. Okay. We're going to talk about DAUs in a bit, MAUs in a bit. So this company, whether like it or not, it's all about DAUs and MAUs. Family of apps, trends of family metrics, daily active people, Facebook, Instagram, Messenger, WhatsApp, collectively, family products. Okay, current DAP rely upon techniques, so I don't want to see DAP. Can you give me a breakdown? Monthly active people, okay. Average revenue per person since Q3, $8. So it has been increasing since 2019, which is a good sign. And hopefully they reveal that later on ARPP because this is Q3. It'll take some time and a few days for them to actually have Form 10Q for Q4. But let's see. So other revenue. So they didn't break it down. Okay? They didn't break it down. I don't know how much of that bulk is actually from Instagram and WhatsApp. I doubt WhatsApp because they don't advertise on WhatsApp, but it's still advertising, which is not a good thing. So this net advertising, I'm pretty I can assume that it's mostly again from IG and FB. I just wanted to see what's something new that WhatsApp has. Let's see, WhatsApp. WhatsApp application. WhatsApp. Let's see. Messenger. No, spelled it wrong. Okay. Messenger. WhatsApp products. Family metrics. Family metrics. Okay. Hit users. RL. Grow. Show results. Messenger. It was not material. Advertising, they also use Messenger to have advertising. Okay, ads, everything ads. Okay, that's enough. But let's since we're here, let's see how much they made in Q3. See how much they made in Q3. So 3 months they made 9B with net income revenue of 29B, and I'm pretty sure they already have. And in 9 months they 84. Okay, so 9, where were we? Where were we? There we are. So I was sold on Facebook last time because they promised. Did you guys see their sort of conference meeting where they present to investors and whatnot? Mark Zuckerberg's vision of I was sold on, actually very sold on what they call chatbot, right? Where you can literally talk with your business. All you're gonna do is you can WhatsApp your business, right? As long as there are APIs, as long as the chatbots are actually interlinked with each other, you can literally talk with the business, order some flowers, pay like with the wallet, and you can get the product, right? So I was sold on that because it's an inefficiency, especially in Malaysia, right? You call a fucking customer service and it will take half an hour for you to, not only will you use your phone bills, but it's inefficient. It's probably 1 hour before you get your things done. You want to check your balance or you want to check something, you lost your credit card, they're still running manually, right? That doesn't work. But chatbot is insane. All you got to do is just employ the developers, let you know, again, work up with the API. You can literally chat with the business, and that's the future. In a way, it's very simple, but it's I don't know why. So they didn't roll that out. They didn't roll potential wallet revenues from what they promised. In a way, that's what I see because they have like a huge vision, and I can share from you slides, but I don't know why. But they laid out the whole vision that okay, they need 5 years to grow the ecosystem of Facebook and IG, which they have done very nicely. And then the next 10 years on openers, more integrated apps. But I feel that it's too slow. I feel like if we were to work out S curve, and I remember we talked about S curve before. Let me just show you there. So we got timeless cycle, right? We got cycles, right? Investing in FD or any other company, we have to ask ourselves, where are they in the S curve, right? Where are they right now in the S curve so that we know, are we sort of like where are we, right? Before you invest in Facebook, you'll know that okay, this guy is probably serious. probably here before they plateau back into where they were. I think they keep running out of battery, but I just completely stop. So we have to know where they're in the S curve, and this is very important. This is actually what we have to see from their user growth, right? DAUs and MAUs, right? I think they're here. If I was to take a guess, I think they're here unless they really break that inflection point and tell people that okay, we've got a new product, it's real. Oculus, by the way, it's not going to come for the next 5 years, in my opinion. So that's stuff. They're not here. They're not here. They have a lot of room, but TikTok is here, and that adoption went quickly. So we have to ask ourselves, okay, before we buy Facebook, where are they now? Right? That is important. Brett Savage. Good to see you here, buddy. Okay. Okay, so we've got advertising, the majority chunk of the revenues. And diversified, but okay. Family apps operating income. Okay. So origin, we have, we have expenses as a percentage of revenue. So G&A, what we want to see is a decline. So G&A has been decreasing a little bit. It's not good, but okay. It's a little bit decent. Marketing sales marketing.
It depends on your. Oh, geez, ran out of. Let's see. It ran. Okay, so this ran out of battery. You guys can still hear me. Um, Now the bad thing about investing in these type of companies is that we want to see sort of exponential growth, right? We want to see exponential growth, but we don't see that here. I don't see that here. That's why it's arguable that it might be stagnating. Now, I know we have to consider the full year. So we take in all the revenues and all the revenues 2020, we can still see that. But I mean, that's what we get investing in Meta, right? Investing in Meta is more of a stable company. It's just that the markets have been brutal since they're trading it like a crypto stock. Bad earnings, slightly 25% down for a $1 trillion market cap company, right? So diluted EPS, which is good, is improving. Capital expenditures, it's improving. It's increasing quite a lot. Capex, okay, it's increasing quite a lot. So family DAP, we got growth, but is this stagnating though? Right? So from 2.36 to 2.82, is DAP stagnating? Is MAP stagnating? That's the question. And I don't know. If we were to hold Facebook right now, I mean, when it comes to investing, it's all about what's the future of it, right? We look at PEs to make an entry, but we look at forward PEs to sort of determine when to hold. And we work out free cash flows or earnings multiple to determine when to hold. But when I look at this, I'm thinking, how long will Facebook be relevant? That's my question, right? How long will Facebook be relevant um, with all the competition? And Facebook practically, they're a giant. They can be anything. They just have to be more creative And other than like all, if you think about like going down memory lane, all of the products that they have launched other than Facebook is 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 a failure in a way, right? They acquired Instagram, they acquired WhatsApp. All Oculus is a mess in my opinion. So they just have to break that through. How are they going to increase ARR, right? Average revenue per user, ARPU. How are they going to sort of get more people back? And whether we like it or not, we need content. We need content. YouTube values their content providers, KOLs, whatever you want to call it. TikTok does. How are they going to increase that, DAU? And the user interface for Facebook is not sexy anymore. Let's put it that way. It's not sexy at all. If I was to rate sort of the demographics of people using Facebook, I would say boomers and probably the older millennials in a way. And I know we are on Facebook. Our group is on Facebook, but how is that trend going to change 5 years in? And it's very fast, right? 5 years come very fast. The trends move very fast. Imagine in 5 years' time, Gen Y, Gen Z will be older, and I'm in outstation right now, and they're consuming TikTok, YouTube, Roblox. They don't use Facebook at all. So will Facebook, when we go into that shift, when boomers will give their money, inheritance money back to Gen Ys and millennials or whatever, or millennials giving their inheritance money to Gen Y, Gen Z, which will probably take 10 years. But what is the, what is the trend going into that, right? So that's why I didn't invest in Facebook in a way. And I'm glad I didn't, because my money that I could actually buy in high growth stocks or Tesla actually made more than how much I could actually gain in Facebook. But what I'm trying to say, and we're gonna work, we can talk about valuations in a bit, right? But when I look at this trend, I'm thinking, okay, not so good news. Not so good news, right? Um, let's see, let's move forward. Let's see. Um, okay. I'm just checking whether or not I'm still live. Sorry. Okay, so we got family monthly active people. Um, family monthly active people. We define a monthly active person as a registered and logged in user. Okay. So this is in the B's. Is it stagnating? Family average revenue per person, ARPP, is increasing, which is good. Facebook daily active users. I mean, call me crazy, but is this like a sign of plateau? I don't know. Daily active users. It's still strong. I mean, having daily active users 1.9 B, 1.9 B is still very strong, and I'm pretty sure it's stronger than TikTok. I'm not sure, but it's there will this sort of go down off the scale. MAUs, okay, MAUs, same thing as DAUs, right? Facebook average revenue per user, ARPU, worldwide, you can see that it's still increasing. The only thing I like about Facebook, to be frank, is their free cash flow. There we go. No debt, huge amounts of cash, which is good at these times right now, right? Market is punishing these sort of stocks that have no free cash flow. Net income positive, which is, I think their margins are like 10-30%. That's what that's the good thing about Facebook. And see, that's a problem. Like if we want to talk about sales and marketing and OPEX, they will have to increase. That's why we don't see that stagnate. I mean, we don't see that going down. For a company like Facebook still actually spending on S&M is to me a problem, right? So you can see S&M within 2018, 23, 22, 21%, average of probably 20%, 22. Like they will need to spend more sales and marketing on any of the products, all of their products, whatever it is, to be, you know, gaining more. They got newer products. They'll need to be spending more S&M. So that is a problem because as users actually drop for any of their products other than Facebook, they will need to spend more to keep them coming or obtain them, and that S&M could be just by paying KOLs, just by spending on whatever to be actually market their new products, right? So that is somewhat of a problem. That is somewhat of a problem because if we want to, like, seriously, Facebook has already been 10 years since they listed, 11, 12 years, whatever you want to call it, since they listed, and we expect to see better performance, compounded growth, lesser S&M, higher increase in revenues. Now, year over year, we're going to work out year over year, but we expect to see more of that, which they don't have, right? I mean, it took them 10, 11 years. There's bound to be a Facebook killer. And right now it's TikTok, right? IG is still going strong. I love IG, but there's bound to be a IG and Facebook killer, and it's testament that whatever trend comes out new, as long as you capture the right target market and demographics, you will own and you will capture market share. Like TikTok is a new world in a way, but how are they going to keep themselves running? And they need to depend on other investments, which I'm not sold on for Oculus, right? I'm not. VR space is interesting, but I'm not really entirely sold on that. So they really need to concentrate. And I can't believe it. I saw this in 2019. Their stock price have been going up since then because of 2020, right? But I can't believe I was so bullish on 2019, and I'm just excited about their growth. And when I see their growth right now, it's just not there. It's just not there. Because when I invest, I look at high growth. It doesn't matter if I want to diversify some of my portfolio into safer growth stocks, which is Facebook. I'm still just gonna get like probably 8% year over year returns on average. There's no KGAR. There's no compounded growth, in my opinion. So that's something to think about, right? So free cash flow, got 12B, which is strong. The financials are really strong. Really, really strong. Okay, so let's see. Let's go into their and I got this opened up. I got my Excel. Yep. So we got revenue, which at December 31st, 2021. So we got full year at 117B. Okay, now the good thing is 117B minus 85. So it's like 20B, 20. I'm trying to work out my maths. 20B will put that 105. So it's 30B. So the good thing is that there's a huge increase in revenues. Huge, right? It's close to 30B increase from 2020 to 2021, which is actually is big double digits, right? 40%. 40B is 50%. 30B is probably 40, 30 plus 40%. So that's a huge increase in revenues. Cost and expenses, total cost and expenses. Okay, so that increased as well. So income from operations, let's go to net income. Net income is actually 39B, which grew also close to 40 plus percent, right? So net income is 39, highest in any record profits, record revenues, which is good. Then we got share-based compensation. Advertising is still the same. Okay. You see, so that's the problem, right? Other revenues are actually not even it's not even increasing. It's increasing by a little bit. That's the problem I have. Family of apps. Okay, so that's the income statement. Let's look at the balance sheet, which is, we all know is fucking strong. We got total assets. 165B. Cash and cash equivalents at 16B. So this company, if we want to talk about cash, they have 47B, right? We got 31 plus 16, 47B, both of cash. Accounts receivable is not an alarming amount ish, which is 14B. That increased. Property, plant, and equipment. We got total assets. So total assets at 165B. Current liabilities. Very well. Current liabilities grew, but overall it's still, of course, manageable compared with how much cash they have. Total liabilities 41. It's a net cash company, basically, right? Their cash is more than the total liability. So that's what made them sort of strong in that way for investors, right? Value investors, whatever it is. Okay, so again, a strong balance sheet. Now, if we wanted to work out valuations on this bad boy, we sort of need to. So let's look at the income statement again. Now, full year, we have 117B. The question I have, and it's a little hard to say because I need more time to research on what's their direction. I need more research on their. I need to look at their transcript and what did the CEO and what did Mark Zuckerberg actually promised. What are the new products that they're launching that is more realistic and they can actually acquire revenues? I have a problem with 98% of their revenues getting from advertising, and I still see stagnate. The key thing about the S curve is that we need to break inflection points, and then I don't see that here. So although yes, they have 30 to 40% revenue increase from 2020, which is huge because most likely the first 2 quarters was probably reflective of how the usage of the DAUs increased from 2020. But the question I have myself is that where are they going to get from here? That's where the qualitative comes in. And probably the stagnating probably won't last. Won't be so quick, right? The stagnate of revenues, the stagnate of net income won't probably happen so quick. But I don't know. I'm trying to think on the future, and I don't want to. I'm trying to think in a way that I don't want to get myself influenced from the numbers too much and think about the qualitative side. I'm asking my bear side of my shoulder, right? So the good thing, the angel side is saying, okay, numbers are fucking awesome, right? 40% growth for this monster, big company. It's actually huge. And think about it. Tattooed Chef has 40%. Correct me if I'm wrong, 40% revenue growth. Which one would you rather buy? Which is safer and has a potential to be, growing big in revenues. But I'm thinking stagnating. I'm looking at the future. I'm thinking stagnating in terms of qualitative side. So there are good things, there are bad things, right? 39B net income puts them at probably a 30% profit margin, which is strong as fuck. Yeah, there you go. So that's my comment on Facebook, right? And I think some of you actually requested for that, so that's why I want to do it today. Let me know what you guys think. Let's see. Did anyone put in the chats? No, Fred Savage. Okay. Yeah. If you guys, have anything that you want me to cover on, just type in the what is that? Type in the chats, right? And comment. Again, if you're watching this live right now, click hashtag live so I know you're here. It's good sharing with you. And if you're watching this replay, click hashtag replay. If there are any other companies that you want me to search in terms of valuations or balance sheets or anything, recent quarter calls, let me know. I think it's good to address, the big boys, the FANG, because we need to see their progress, right? The ultimate question is from here, digitization 3.0 is still happening, but digitization 3.0 gives room and leeway for other companies to perform, younger companies, newer companies. So, what is the active? Are they going more into that newer companies or are they going to be sticking to the legacy, Facebook and all the old school boys, right? So that's the problem I have about Facebook. And this is something I think we should really address seriously, because we invest for growth. Let's put it that way. You want to invest for hedging, that's fine. You're investing in, a growth company, and it's mid growth in a way, right? They have growth. They have a strong balance sheet, which is going to be, they can definitely survive. But how's things going to be in the future? So let me add this watch list. Facebook 237. Let's talk about valuations for a little bit. So their market cap, I know we already ran out of time, but let's talk about valuations for a little bit. So what's their market cap right now? So market cap is a 659B, PE of 17. Now PE of 17 is just a fucking steal in terms of value play, right? Everything that I've been talking about was, if they were to grow in the future, will that stagnate? But if you would look for a value hedge, having your hands on a growth play and, a mixture of growth and value, you could buy Facebook as an option, which to me is, is a good deal. But let's look at valuations, right? So we got the net income full year. What did I close it? We got net income full year. There we go. The net income full year of 39 billion. Now, this company is a little difficult to be looking at earnings multiple, because they already have positive free cash flow and they're higher up in the S curve. But for the sake of valuation, let's put it that way. They have 39B in net income, and assuming they can grow that 39B 20%, right? 20% year over year. And let's look at forward PEs, right? So let's say they can grow 20%. 39B 20% is my calculator. 39B times 1 point. I'm giving 20% because I want to be conservative. We can go 25% if we want. So it's 48B, right? It's going to be a 48B net income company by next year. And if we were to divide the 659 divided by 49, we would have 13 PE. So it's sort of a 13 PE forward PE company. Now, is that a steal? Especially if the markets were to go down more. Yes, I would say it's a steal, because it's below 15, it's below 20. It's a cash cow. They can still survive. I mean, people are still using Facebook. The only thing is that if I was to invest further in down the road from 5 years, then I wouldn't invest in Facebook. But valuation wise and forward PE wise, yes, I would say this is a crazy deal to be grabbing on now. And sorry if I've been too bearish on the growth. I just want to be that way because I want to be safe, right? But we also have to talk about horizon. We have to talk about next year or next 5 years. And I'm thinking, let's see what analysts have to say on Finviz, right? So we got income 40B. Okay, we already got that. PEG ratio of 0.79. Now, I can't see, the only reason how we would use PEG is if we to understand in quantum the qualitative analysis, right? I don't agree with PEG ratio on Tesla for Finviz, because they said Tesla has a PEG of 5 or 7. I believe Tesla has a PEG of 2 only, right? So how do we get PEG? We need to work out the earnings growth in 5 years. That's how it works. So let's see what analysts have on forward PE. So you see, forward PE, analysts have forward PE of 16 billion. Now, the key thing is to actually look at the earnings transcript, because they said it's part of the guidance, right? That's why the share price tanked, is because they guided that they will be lower. Now, forward PE is actually reflective of that, because they're actually doubting their ability to earn, and I gave a 25% increase. So this is contingent, like a forward PE of 13 is contingent for them to grow 25%, and assuming it stagnates, right? The good news, if we were to invest in this company, and we need to see, is that the results they're actually telling people is sandbagged, and they can actually outperform. Um, but they also considering, right? They also lost the deal with Apple, and that cost them 10B. They blame Apple, right? For not being part of, I don't know. I don't know what exactly was that deal. I didn't really read into FB. I've been following up on FB for quite a time, but so analysts have them at 16. We need to work out ourselves whether or not it is 16 or is it 13. Um, but valuation wise, I would say it's sort of a steal. They just have to increase. If we are very confident that they can actually have forward PE of 13 or 15 or 14, which is lower than the current PE, then I would say it's a steal. If it's not, then we would probably see their valuations around this level. So that's a problem to consider, right? So again, we looked at Meta. We talked about their growth potential. We looked at the earnings. We looked at the numbers, which is still strong. We're talking about valuations. So I hope you guys got some value out of this today. And again, if there's any other companies you want me to, look at for the next live, please do so. I will probably be in the next live. I'll probably be talking about Upstart or Affirm on fintech. I don't know. If you want me to, please let me know. Yeah. So, or not, I'll be talking about liquidity, actually, right? Very relevant to these times right now. Yep. Assessing our liquidity. So, yep. Hope you guys have value, and I'll see you next week, guys. Bye bye.